Every decision you make today might be influenced by a force you can't even see. It's a ghost in the machine. It's the faint, terrifying echo of the year 1929. Most people think the Great Depression is a finished story, a relic of black and white history. They are wrong. The system that failed a century ago has been quietly, perfectly rebuilt. The core danger is not history repeating itself. It's times repeating history. In the Roaring Twenties, the belief was a form of currency. Everyone was a genius. Everyone was rich. Stocks only went up. Real estate was a sure bet. Sound familiar? The world was high on a potent drug, cheap credit. People bought shares on margin, borrowing money to bet on a rising market. Their confidence was the only glue holding the debt together. It was an illusion of wealth, built not on production, but on borrowed hope. Now, look around. The instruments have changed, but the orchestra is the same. We don't use ticker tape. We use trading apps. We don't have margin loans. We have trillion-dollar deficits. We call it modern finance. We call it innovation. But it's the same psychological trap. The belief that the rules of gravity no longer apply to us. The real lesson of 1929 wasn't the crash itself. The crash was a symptom. The real sickness was the structure underneath. Too much debt, too little real income. It's the same script, updated for a new century. And the next segment reveals why it's more dangerous now than ever before. The ghost of 1929 has been practicing a dangerous form of mitosis. It's now global. Back then, a bank failure took down an American town. Today, a shock ripples across continents in milliseconds. The stakes are planetary. We've created a web of complexity, derivatives, hedge funds, algorithmic trading. This magnifies small shocks into systemic threats. In the 1920 seconds, inequality was a fire hazard. A small elite controlled the wealth. The majority scraped by on credit. When the bubble burst, the working class was wiped out. What about today? The top 1% owns more wealth than the entire bottom 90% combined. Corporate profits break records while wages stagnate. This forces the middle class to use debt, borrowed hope, just to fill the gap. This is the ultimate conflict. A stability built on instability. And who is supposed to save us? The central banks. In the 1920 seconds, the Federal Reserve triggered a violent liquidity crunch. The system choked. Today, central banks face the same impossible dilemma. Print more money and risk decay, or raise rates and trigger collapse. Every fix requires more debt, more intervention. Each rescue plants the seed for the next collapse. The system is now addicted to the cure. We think we are smarter than our grandparents. We tell ourselves, this time is different because of technology. But technology hasn't changed human nature. It's simply automated our greed and fear. In 1929, speculation was visible. Fear spread at the speed of a telegram. Today, speculation is digital. We have meme stocks, NFTs, and crypto bubbles. The psychology is identical. FOMO, greed, and the belief in easy wealth. The difference? The speed. When a fall is detected, algorithms don't pause to think. They sell. When they sell, others follow instantly. Liquidity can disappear in seconds. What once unfolded over weeks now happens before markets even open. The financial world has achieved a dangerous velocity. The ghost in the machine is not just back. It's wearing a CPU. The crisis will spread before most of us even realize it has begun. The core lesson of every bubble remains. Confidence blinds. Complacency builds. Before every collapse, people feel the safest. They dismiss warnings as pessimism. Denial is the first, most dangerous phase of the disease. The Great Depression exposed one uncomfortable truth. When systems grow too unequal and too leveraged, they collapse under their own weight. Arithmetic doesn't lie. If debt grows faster than income, repayment becomes impossible. If growth depends on credit expansion, stability is an illusion. Our stability foundations came times after times the disaster. Once governments learned they could manipulate markets, they never stopped. This created the permanent condition of moral hazard. Risk is socialized, but reward remains private. We've chosen the path of inflation and decay over deflation and despair. Persistent inflation silently punishes savers and shifts wealth upward. The system depends on this hidden transfer. In 2025, few imagine a decade of depression. That familiarity is what makes the echo so dangerous. The question isn't whether the system can correct, it's whether we have the political will to allow a correction. When future historians study our age, they will ask the same question we ask of 1929. How did they not see? The answer will be simple. They did. They simply chose not to believe. Comfort is always easier than correction. We are repeating the mistakes of our ancestors with better technology. The pattern is old, the context is new, and the stakes are immeasurable. So, as debt mounts, speculation grows, and inequality deepens, ask yourself, have we truly engineered a safer system, or have we just built a more efficient machine for repeating our historical failures? Where do you stand when the illusion breaks again?